Hello everyone, my name is David Preston and I'm the Director of Investments for First Bank Wealth Management. Did you know that on August 22nd, a little over 2 weeks ago, marked an important milestone in the history of the U.S. stock market? As of August 22nd, this current bull market, which began on March 9, 2009, became the longest running in history at 3,455 days. We're now at 3,466 days and still counting. The previous record for the longest running bull market was 1990 to 2000. And we define a bull market as any continuous uptrend without any declines of at least 20%. Now, as shown by this next chart, which ranks bull markets by returns, we can see where this one ranks so far. Since this current uptrend started, the S&P 500 is up around 425%, or a little over 19% annualized. So while this current bull market is the longest, it's not the highest returning, or at least not yet, as it still trails the bull market of the 1990s, driven by the internet and technology boom, which was up 545%, and the post-World War II bull market, which is up 488%. But the final chapter on this current bull market has not been written yet. So we'll see if this bull market continues and see if we can break the record for not only the longest, but also the strongest. But just because it has been the longest running bull market in history doesn't mean it was easy to stay the course along the way. Remember how worried and concerned everyone was in early 2009 whether this current uptrend would continue or not? We've also had several stomach-churning drops along the way, driven by such headlines as the European debt crisis in 2010, downgrade of U.S. debt in 2011, government shutdown in 2013, Ebola virus fears in 2014, Chinese stock bubble popping in 2015, an almost 80% drop in the price of crude in late 2015, early 2016, Brexit in the summer of 2016, and then the U.S. election uncertainties in the fall of 2016. Plus, we've had several interest rate spikes along the way, and this year, worries about trade war. So while there were several scares along the way, those that stayed disciplined were rewarded by this current long-term trend in the stock market. But bull markets don't just die of old age. There's usually either an economic downturn or some major geopolitical event which becomes the catalyst for a correction. But at the last market peak in 2000, 10-year bond yields were over 6%, the PE multiple is over 30. Today, bond yields are under 3% and the PE multiple is around 17, which is not that far above the long-term average of around 15. So it seems like it's much more reasonable valuations today and no extremes by any measure. But just because the market is up is no reason to get complacent. We know that next major downturn is looming out there somewhere, so make sure you're prepared with the right asset allocation strategy. And finally, don't count on your friends in the media to tell you when the next downturn is coming, and I use friends here in air quotes. But if you can look at these headlines, and I'll pause here for a few seconds so you can look at some of these headlines as the media tried to scare you out of the market. And talk about your fake news. Check out some of these headlines. So in closing, thank you for tuning in today. And if you have any feedback or any suggestions for future market topics, please shoot me an email at david.preston@fbol.com.